we're here to talk about our options plan for the week of 12/29 to January 2nd. It's going to be a short week, but we got a lot of good information for you. Real quick before we get started, please note that this is investing and it involves significant risk, and the information provided here is solely for educational purposes only. This is not financial advice, and it's crucial to conduct your own due diligence before making any investment decisions. Alright, let's get into it. Alrighty, welcome back to the main portfolio. We're going to do a quick recap of last week as promised to make sure you guys know where we stand on the portfolio. As the viewers saw that we had over 300 shares of CLS. Let's go ahead and talk about that first. So here we have essentially 300 shares of CLS that we had at a strike price of 302.50. We pretty much came here and got rid of 90,000 of capital freed up, which was excellent. We made a few dollars in process and captured a lot of great premium. Next we have AVGO. So AVGO is going to be our next big primary target. We were able to get this called away. We had 200 shares of AVGO called away at a strike price of 345. Again, this was at the money, so we didn't make any additional funds during the actual sale or the call of this process. However, we did free up another $69,000 right before the new year, so we can go ahead and realign our strategy for the next week. So that's excellent. Alright, here we can see where a bunch of HIMS calls expired that we had set up for last week. Unfortunately, they are still assigned to us, so we weren't able to get them called away, but we get to resell them in this video. Alright, here we have Apple. Essentially, it was a cash secured put we sold last week for an expiration of December 26th. We sold it at a strike price of $267.05. Close to expiration, we were able to buy it back for $1 to free up some capital. Essentially, when we wanted to get out of the position and make sure that we were ready with a clean slate for our big. We're also going to look at Robinhood. We had a put for Robinhood at 115. That Robinhood put essentially expired in last week as well. We bought that back for $1 as well. Made a nice chunk of change for premium. Okay, that's a recap for last week. Let's go ahead and take a look at the premiums we would like to sell and collect for this week. Alright, so we currently hold 700 shares of HIMS. 500 of those shares were assigned at the 42 strike price, and the other 200 shares were assigned at the 50 and 51 strike prices respectively. Because we don't want to sell below our cost basis and still capture some decent premiums, we're going to deviate from our weekly premium strategy and go ahead and decide to see if we can get a little bit better premium than 6 cents a share. So we're going to go out to the January 9th premium and see and take a look at what that's like. Currently it's going to be just around 6 or 7 cents as well. So let's go ahead and go to the January 16th strike, and we can see here that we can get roughly about 37 cents a share. So we're going to go ahead and sell that for 37 cents a share, and that basically tells us that we're going to get $37 a contract. And we're going to sell 5 contracts at $42 strike that we were signed at. Again, we're not trying to make more money. We're just allow us to ultimately get into a lot of the premium that we would want to for the week. It's not a lot, but again, every little bit is going to lower our dollar cost average or cost basis, and we're going to be able to make quite a little bit of money over time as HIMS slowly recovers. Not too shabby. And if it goes at $42 and we get assigned at it, great. We'll have free up that capital for something else. Alright, let's go ahead and take a look at the other equity that we have in this portfolio. Right now we're going to look at Hood. Hood, we have 200 shares that we were assigned at a strike price of 131 and 133. So we're going to cut the difference on this one, and we're going to go ahead and sell a Hood covered call for strike price of 132. Since we have two different strike prices on this one, we're just going to weight them together. And ultimately we're going to go ahead and capture a premium of 51 cents a share, or $51 a contract. Here we're going to have our 2 contracts for the 200 shares. So we're going to sell this at a strike price of 57 cents a share and get $112 of premium for this specific trade. Alright, we're going to switch gears now and go head over to our Robinhood account. We have a Roth IRA within Robinhood, so we like to trade some options there. It's a really easy way to get in and out of a lot of positions without hitting a lot of tax issues. So here we have 200 shares of SoFi Technologies that were assigned to us at $27.50 and $28 respectively. So we're going to go ahead and sell covered calls on both of those. What we're going to do here is we're just going to sell them at the $28 strike, so that we have a little bit of premium capture, as well as we can capture some gains in the $27.50 strike that was assigned to us. Here we're going to get about approximately 16 to 17 cents per share on this one, and we're going to sell 2 contracts to collect a total of $16. Now, while it doesn't seem like a lot, we also aren't actually risking a lot, so we're going to ultimately keep doing this until SoFi goes well above this, and then we're going to do the wheel strategy all over again, something that we can easily prepare to our future and manage our risk collectively. As you can see, it was immediately filled as well, so we captured about $33.96 of premium. Alright, as you can see in the top right of the screen, we have $8,624 around to play around with. So we can go ahead and see, alright, let's continue growing this tax-free account as big as we possibly can. So let's go back to SoFi and see if we can sell some cash secured puts today. Here we can look at the 26 strike possibly to see if we can collect some premium. It's really close to the strike price, so it's a little riskier than we would like, especially for a Roth account. Alright, so here we see that we would get just $47.94. A, we would over leverage SoFi in this particular case. B, we're really close to the strike. So not only would we get potentially 500 shares of SoFi at one point, but we would also then not get a good chunk of change of premium to spend $8,000. We can do the calculation of how much percentage ROI this is, but ultimately it's quite not enough. So we're going to go ahead and move on to a different stock and see if there's another stock out there that can give us some better premium. So here we have Applied Digital. It's an AI play. Basically, a lot of technical momentum is behind the stock. It's been doing pretty well recently. So we're going to try and see if we can sell some cash secured puts here to see if we can get a good amount of premium. We're going to go to the delta that is more close to the risk that we want to accept. So here we are at the 22.5 cash secured put, and we're getting $27 for selling one of these cash secured puts. It was filled immediately. So again, it's quite off the strike price. We're at the 20 delta. Can't go wrong with this, so win there. Alrighty, another potential stock that we can look at is Iris Energy, another tangential AI play that we're kind of bullish on. So let's go ahead and find something in the very low delta, because this is a Roth account. We don't want to take too much risk. Go down to the 20 delta, ask for the 37 delta to the 44 credit price, and see if we can get that filled while we're here. Alright, so now that we have iron wrapped up, we can go and look at SoFi again, because that's the amount of cash that we have left available. We can go ahead and look at that 26 strike with a $16% share premium, and we're going to go ahead and put in a order for 1 contract. Because we like SoFi, we're bullish on it. We're okay with the risk of adding a heavy SoFi. We just don't want to do all SoFi in a Roth account. That's super safe, but it's kind of problematic if you have losses in there. So want to be careful. It is a risky play to have options in your Roth account, but again, it could be potentially beneficial as well. So just be careful if you do it. It's not recommended for sure, so just be careful. All right, it's at the end of our journey today. Not a ton of premium, but we basically got a lot of good positions potentially out the door for assignment, and we want to start next year with a clean slate. So we're kind of emptying out our closet, want to make sure we're doing some spring cleaning, and we want to start 2026 with that full $250,000 portfolio. The real secret that I'm trying to keep from you guys, or was trying to keep from you guys, essentially is like, now we're going to try and see if we can turn this into 7 figures and see how far we can take that $250,000 of seed money and see if we can turn it, and how long it would take to turn it into 7 figures. It's going to be a grind, but please subscribe if you want to see the journey on turning that 250 into $1 million. So next year you're going to see all of that into play. So we're really excited about having to do that. Again, if you like, subscribe, do whatever you can to help the channel out. We're just getting started. If you're watching this, we appreciate you. The format for the phone, or the long format for the video, is essentially because I work and have a daytime job, so I can't just always record on my desktop all the time. I kind of have to do this on the go sometimes. So that being said, if you guys can still appreciate and support the channel, let us know if you like this format or not. If you like the concise video format, we can definitely do it that way as well. So just kind of know what you guys like, and we can try and tailor it to either just desktop or just phone. We're happy to do that as well. But have a great New Year's. Love you guys. Take care, and we'll see you next year.